Yes, I did. Yes, Anthony, I did shave. I'm pretty proud of myself. Thank you for noticing.
Good afternoon.
See you soon.
I'm Anthony. Welcome to No Vacancy Live. That's my friend Glenn.
You're watching the #1 show in hospitality. Hey everybody, thanks so much for joining us on another fun-filled episode of No Vacancy Live. That's Anthony Melchiori. I'm Glenn Hausman. I love that you are spending either our morning with us, your lunchtime with us, or if you're in Singapore, maybe middle of the night with us. How are you?
Or maybe you're listening to us on Sunday afternoon while you're walking your dog.
That is true, and it's okay. It's okay. You could pick up that dog poop. It's all right.
No, if you're listening to us on a Sunday when you're supposed to relax and not think about work and you're walking your dog, that's not okay.
I would argue on Sundays is a great day to check out our catalog of shows. All the great interviews we've done, over 740 something episodes, give or take, over there.
How is that possible?
That we've done that many episodes?
Yeah, I've done with you, what, 500?
At least. Yeah. Like if I look at the episode count, that's
500 hours,
743. Yeah, I don't know. It's pretty cool. I absolutely love it. I want to thank everybody for making us the #1 podcast in hospitality again for 2 years in a row. The only 2 years they've done this thing. So are you ready to talk a little bit about what's going on with the state of the financial side of the business today?
Yeah, because I think we're in that stage right now, and our next guest knows better than anyone, but we're at that stage right now where it is or it isn't. We're not sure. And I think that is the most that's the scariest place for financial people to be in.
Yep.
If they're in during COVID, everything shut down. They know where they were. When things are good, they know where they are. And it's like, well, is it or isn't? Wait. Recession is definitely going to happen, but people are still spending money. Wait, inflation is still happening. And the prices aren't coming down, but they're supposed to be coming down. So I think anybody that thinks that they know what the hell's happening, I want to talk to him. So hopefully he knows.
We're gonna find out right about now. Daniel Lesser, co-founder, president, CEO, LW Hospitality Advisors. Now, Dan, we were talking just before we went on air. Anthony was not present for this conversation. It's been 18 months now. I keep hearing the recession is 6 months from now. What's going on? Why can't we figure out the state of the economy? In my whole career, getting on 25, 30 years here, I've never felt this weird about not knowing the future before.
Oh, really? I have. But anyway, go ahead, Dan.
Well, first of all, great to see you both. And thank you again for inviting me. It's such a great question, right? Because if you think about it, the lodging industry fundamentals are very much driven by the underlying economy. And this is the most predicted recession in my career,
right?
And it's just been going on, and you have all these prognosticators, some of which are very bullish and others that are bearish. By the way, many of these folks are very well known and respected, economists, venture capitalists, what have you, and it seems to be kind of all over the board. So the answer to your question is, what the reality is? Nobody knows, right? Nobody knows.
Well, I think we're in one of those definitions of recession when somebody else loses their job, depression when you lose your job. You look at what's going on in the tech sector, for example. Wall Street decided that everybody's got to get rid of 6% of their workforce for some reason, right? And that's not the case in hospitality, where we're still in estimate about 1 million jobs short.
Microcosm of kind of up is down, down is up. I had an early breakfast with a friend of mine.
Yeah.
This is exactly what was on the menu. It's a regular diner, a New York diner. It's in Queens, and he had an egg white omelet with tomatoes. I had an egg white omelet with mushrooms. I had a small glass of apple juice. He had 1 cup of coffee. With a 20% tip, how much was our check? And I wanted, before you say it, the diner was packed. How much did that cost?
$32.
$60.
Oh,
plus
I would have said
3.5% for the credit card fee. No.
We pay cash. I'm
also-
Italian. I'm Italian. I pay cash.
he takes a bag out of a satchel, and then just like,
but $60, and like when you look at the check, you're like, oh, that was a little bit more expensive. But I was like, and then I said, no, it's the wrong check, and I'm looking, I'm like, did they just charge me $22 for an egg white omelet with 2 eggs? Holy crap! Now I don't get mad at the diner. I don't, because I know they're getting crushed with wages, and they're getting crushed with taxes, and they're getting crushed. I have a friend that has a very successful diner in New York City, and he says, Anthony, if I make 5%, that's I'll be lucky. So if he grosses $3 million, 5%, $3 million to work 18 hours a day, 7 days a week, he might as well go get a regular entry level job. So I understand it, but I guess the reason I'm bringing it up is not the $60. I'm bringing up that it was packed.
yeah. So Dan, what's your observation on that? It's getting really expensive out there, but it doesn't seem to be impacting what I'm seeing with what he's seeing, what I'm seeing in airports, what I'm seeing in every hotel I'm in. It's crazy.
I have not been on a plane in the past, 9 to 12 months that had an empty seat on it. So to
Wait,
your
let
point,
me guess. You hear, tonight there's limited room on today's flight. Please bring up those bags right now. That kind of a thing. Every single flight. Woo.
right.
Go on.
I
Please,
mean, it is incredible. Listen, I think there's still a lot of unleashed pent up demand that's still being brought into the marketplace, right? And listen, I think generally there's been maybe a shift in sort of mentality of. COVID was obviously a real awakener in terms of people's mortality, right? So you might as well live today and, sure, save for tomorrow also, but make sure you live for today.
But also, do you think it has anything to do with people are working from home, so they're able to take a few more vacations, and they're able to, when they hear that there's a convention, they hear there's a meeting, they can't wait to get to the airport and run. I have a friend of mine who's a doctor, and he's now kind of thinking his next move, and he's about to go batty because he's been sitting at home for X amount of time, and he's like, I need to go. Like, I need to go because I think people, like, when they have an opportunity to travel for work, they're getting on a plane because they're sitting in their pajamas.
Right. And we've heard a lot about this, since the pandemic. I hate the term, but it is a term, bleisure, right?
Ugh, I hate that word too.
Yeah, but the reality is that the demand is shifting, right? And who was it? Stephanie Lenartz, I think, and Marriott, who said that Thursday used to be the checkout day, and now it's the check-in day.
Right, for sure. And just so
phenomenon.
people know, Stephanie just recently moved to be the CEO of Under Armour, which is pretty incredible for her. Yeah, but you're absolutely right. Now, I don't think the hotel industry has really caught up to that yet. Every event I go into, they're still forcing the classic cylinders of business. This is either business or it's leisure, and never shall their paths meet, kind of like the casino business and the traditional hotel business. Big barriers between them. I think it'd really behoove us if we started to get into that mindset where, I hate to say the word again, bleisure, where it's not just a word, but it's a way that we approach the way that we're doing sales in their hotel too. Yeah, and Anthony, to go to your point real quick, just to give you a little more, Long Island Railroad Pass could cost about $400 depending on where you go. If you're working from home and don't have to go to Manhattan anymore here from Long Island, that's a lot of money you could put into a vacation immediately. Sorry about that.
No, I was just going to say there's 2 words that have been canceled off the show: behoove and bleisure, and you used it twice.
I know. Yes, it'll behoove you to stop saying bleisure. Shoot, I got to take myself out.
And you can go back to say, well, maybe people aren't saving money and they're just spending the money they're making. But even when things were good, America didn't save money. There was a couple years ago, there was an article out there that said 60 or 70% of America couldn't come up with $1,000.
That's right.
So it's fascinating, and human behavior is interesting. But the person looking at LIBOR and the person looking at bringing on debt or lending for like they must be losing their mind. Like, because right now, if I go to raise money for a hotel, forget about long-term relationships. Forget about they know me. I open 35 hotels and I have $1 billion worth of assets. Just say that that's true, right? outside of those relationships, how does anybody give anybody money in this climate? So answer that, please, so I don't have to go to the Hunter conference. I'm just kidding. I'm going anyway.
It's a very interesting question. There's a lot of sort of noise out there that there's no debt. That is so far from the truth. There's debt out there, right? The issue is that today you have to pay for it, right? Whereas it's not free money, which is what.
But Dan, back that up again. We're trying to educate people here. There's no debt out there. What does that mean? And when you said you just have to pay for it, what does that mean so people understand?
Well, that means that interest rates now require that if you borrow money, whoever's lending you the money requires a return on that money. Whereas not long ago, when interest rates were nil, right, you could borrow money essentially for free. Right. So that's not the case anymore. It's really interesting. Yes, interest rates are up from where they were 18, 24 months ago. No ifs, ands, or buts, but everything's relative in life.
Right.
If you look back over 40, 50 years, Anthony, I think you were around in the early 80s when prime was 20%.
Right. Yeah, my mother paid for a mortgage 18%.
Right. So everything's relative in life. Yes. Interest rates are up today. Cost of capital is up today compared to where it was. But on a long-term basis, it's really not that high.
Right. But interestingly enough, Dan, when you go to our events, and by our, I mean our industry's events, the messaging that you get is interest rates are going up, as opposed to saying, wow, I can't believe we had hardly any interest over the last 10 years. Now we're getting back to below normal of what it is. People are looking at it, and I think it affects the psychology of business because they're saying, oh, it's going to cost us so much more, with the perception that it's never been so bad in our entire careers.
Correct. But it's important to remember that there is capital available. Debt, and on the equity side, there's an enormous amount of capital, dry powder that is still looking for yield, right? A lot of this money was raised during the pandemic in anticipation of the all the distress that was expected but never happened, right? I think now we're starting to see it, and we're going to see more and more of it. And the reality is that there is so much equity money out there that for the compelling opportunities that do bubble up, they're going to end up being bid up. And so you're going to end up with distressed transactions that do not necessarily reflect distressed pricing.
Right. So how does this all reflect? Because I'm hearing, if you could go a little bit more into depth about this, I've been hearing about a lot of CMBS loans are coming due this summer, and that's going to kind of change the investment game for a lot of people. Could you explain what I mean by what I just said and the ramifications of
course.
That?
Well, I mean, in very simplistic terms and just throwing out numbers, for example, right? A CMBS deal that was done 5-7 years ago at pick an interest rate, 3-4%, right? And that debt is maturing, right? And needs to get refinanced, right? Well, guess what? The cost of that money today is 2 to 3 times what it was when the deal originated, right? So that's going to create tremendous opportunity for rescue capital, for trades. It's going to create a lot of transaction activity in the market. The other thing too is that there are still quite a number of assets out there that have been PIP deferred, right?
Yes.
And the brands are nobody's playing nicely in the sandbox anymore.
And let me just explain what he's saying is that the brands force you to make certain improvements for the overall quality of the brand, and a lot of those bills are coming due right now. Dan, continue.
Right, and they were very flexible during the pandemic, as were lenders, right? But that party's over. Nobody's playing nicely in the sandbox anymore. So yeah, I mean, there's going to be a lot of transaction activity because of these issues that we're discussing.
What do you mean by a lot? Not a specific number of transactions, but compared to what we've seen, is it going to be 10% more, 20% more, 5,000% more?
Yeah, it's hard to pin a number on it. Listen, transaction activity has slowed a bit. There's still quite a bit of it going on.
Yeah.
But we're starting to see it, escalate. And what's really interesting, if you look at some of the institutional grade, real true trophy type assets that are still trading and trading at very healthy numbers, whether it be the Diplomat in in Miami,
Yeah.
right? Or the
That was
Four
one of the biggest
Seasons,
transactions ever, for people's reference. Yeah.
the Four Seasons in Jackson Hole.
Mm-hmm.
Bramer bought the Four Seasons in Scottsdale, the
Right.
Montage in Laguna, right?
Yeah.
These are one of a kind assets that they're coming to market and they're selling for premium dollars. So there definitely is a little bit of a dichotomy between assets like that and then older, functionally and physically obsolete limited service hotels.
So we have in our business, we kind of lump everything together, and you see that in the statistics. If it says there's 83% occupancy making up a number industry wide, that's the winners, the losers, it's all the good destinations. So is that skewing the numbers that we're seeing with the overall value of transactions? If you take out choice properties, does that change the analysis behind what we're seeing in the numbers?
Mathematically, of course it does.
Yeah.
Yes. Of course it does. Yes.
So it's like a big difference. So if you're operating in the select service level, you might not be reaping the profitability that you think you would have if you're looking at the overall numbers, because some of the properties are skewing to such a great degree.
Yeah, I wouldn't say profitability. I would say from a value perspective.
Sorry, that's what I meant. My apologies. Yeah. Interesting. Anthony, you got anything?
No, just listening to you two gentlemen speaking, it's riveting.
I thought so.
But are you finding, Dan, that we've all been in these meetings, we've all talked to these people that think they know what's going on, or are you having more realistic conversations with people saying, listen, I'm doing my best, but we're not sure? Because in 2008, everybody thought they knew what was going on, and then they got whiplash and go, oh shit, we didn't know that. I will say, Dan, I was on the panel around that time, and I started getting worried because I was general manager of a hotel, and I started seeing my booking window not have a booking window. I saw my groups losing 50% groups. I started seeing everything come up, and I was on the panel, and I said, I think where the star, whoever said that we're getting ready for budget season, and they were saying it's going to be 4% RevPAR increase, whatever. And I budgeted. I'll remember this to the day I die. I budgeted -3 RevPAR increase, and the owner trusted me, even though he yelled at me a little bit.
Right.
And it was a lot worse than that. So I don't think anybody was in reality in 2008. Where are people today?
Listen, everybody's doing the best they can with the available data, right? And as we've said several times during this conversation, nobody really knows what's going to happen tomorrow, right? The fact remains that hotels are terrific hedges against inflation.
That's right.
Because of the fact that you constantly reprice rooms, right? In an up market, that's a beautiful thing. In a down market, it can kind of kill you, right? The sector clearly has perfected yield management, no different than the airline sector, right? An empty room for one night is a perishable commodity that you can never recapture.
Mm-hmm.
And so, it really depends market by market and asset by asset. But listen, I was actually talking to somebody yesterday who was suggesting that our projections were way too optimistic. Why? Because it's never happened. Even during the peak, quote unquote, it never happened, which is true. It never did happen. However, this is an institutional grade piece of real estate in a kind of a secondary market and not a great location within that market. Probably should have never been built to begin with. However, it's there, right? And it was built at over $400,000 a key, and we're kind of estimating it's worth about $125,000 a key. Right. It's a beautiful asset.
Yeah.
It's just in the wrong location, right?
Right.
So at the right price, everything works.
Right.
Yeah. And to get back to what you said about perishable, I always say container of milk, it gets poured down the drain when it's not used. Same thing with a hotel. You can't go back and do the hotel room again. You can't sell a hotel room on February 2nd, 2021. Again on February 3rd, 2021. That was a different room. You can't get that money back. Also, you said something which I think is critically overlooked when people are looking at our industry. We are insanely good at yield management, to a fault almost. We're almost way too obsessed with it. To the point where, listen, in 2008, we wouldn't have seen what was happening. We wouldn't have seen that demand was there, so our price was there 2 seconds later. 2008, if the demand started coming back, it took us a couple of days to catch it. Now we know at 7:01 that the demand's better than it was at 7 a.m. That's one. And two, I think people are financing, and you, again, tell me if I'm wrong, they're financing for the downturn. They're financing for that. Okay, if you're saying we're going to pro forma at 70% occupancy at a 220 rate, but we're going to land at a 40% or 50% occupancy at a 180 rate, and then you have to come up with the difference. I don't know if you saw that a lot in 2008.
I mean, 2008 was another lifetime ago, right? And the reality is that it's very hard to sort of predict the future, right? Nobody
Right.
can predict on September 10th what was going to happen on September 11th, right? March 1st of 2020, right? COVID was still, over there on the other side of the world.
Mm-hmm.
Well, listen, investors don't make money sitting on cash. Right, they got to deploy it and get some sort of return and yield on that money.
Yeah, absolutely.
And so there's so much of it out there that is sitting in cash today that needs to get deployed, that we're actually seeing some equity investors, although cost of debt is rising, they're willing to take a lower return on the equity because they need to get it out.
Right.
And talk about that. You did it last time, but talk about it again for those kids coming out of college and young managers, the difference between, the equity and the debt side and how that works, just so people understand that, because it seems pretty simple, but I get questions like that all the time.
Well, it doesn't matter whether it's a hotel or a house, right? When it sells, right, it can sell all cash, which means that it's all equity, right? Mm-hmm. Or it could sell with some financing provided by a lender, right? And the financing that's provided by the lender is considered debt. Right. So if you finance 75% of an acquisition, right, then 25% is your equity and 75% is the debt.
Right.
Yeah. Excellent. Dan, people's thinking about investing differently. And one of the things that I've been tracking, full disclosure, I've been working with the folks over at Zell Capital Partners that do sale leaseback type of financing. I'm really enjoying the education profit. Do you see this as becoming something that'll be more mainstream in the hospitality, and why? And for those of you who don't know what that means, it's all about selling the land and the building, but you keep your operating company at the same time. And then you even have a window to be able to buy it back. So how do you see this, Dan?
I've seen some of that. I haven't seen a whole lot of it. I mean, let's face it, that really is a financing strategy is what it is, right? But when you think about the fundamental notion of leasing land and building, right, it's a much riskier position than if you own it outright, because you have to pay rent before you put $1 in your pocket, right? So whatever profits come out of the enterprise, you then have to pay the landlord a return on the value of the land and the value of the building. And if there's anything left over, that's what goes into your pocket, right? As opposed to if you own it outright, right, and you pay your debt service, well, then you get your return on your equity. So sale leasebacks, I mean, it's really not something new.
It's just a different, it's not new. It's just it's a different way of looking at the strategy and an ability to deploy cash you would have used tomorrow, today, in another type of an investment. So say I got a hotel behind me. I sell that. I sell the building. I sell the land. Now I got a big chunk of cash. I might be able to invest it into another property that I own outright, and therefore be able to get from point A to D a little bit quicker than had I just pulled out a percentage of the cash flow from that existing property throughout. Correct. So, yeah, I think that's really interesting. And the major casino resorts in Las Vegas have all done that, sold the buildings and the land, and now like MGM pays rent. Anthony?
Yeah. I don't know if I asked you this question, but I know I've asked it here on the podcast, and I wonder if the answer is different now further down the line. When people are looking at projects, are the employment issues becoming a problem? It's like, well, I want a full service, but I can't find dishwashers. I can't find bartenders. I can't find waiters. So are you starting to see people say, yeah, I love full service, but I just can't deal with the brain damage?
I mean, yeah, listen, labor it has been and continues to be and will continue to be a huge challenge. There's no question about it. I think the lodging industry has a little bit of a bad rap when it comes to, labor, and it's a tough business to work in from an operational perspective. The hours are extremely long, right? Hotels never close, And unfortunately, this goes back my entire career. The compensation is not that great. There are better opportunities out there. And so it's a real struggle.
But again, the compensation isn't great at what entry level position is compensation great. It takes 2 or 3 levels to make decent money. You can get a kid that's 23 years old, and by the time he's 27, make easy mid 6 figures in this industry. At 27. So I think that again, having it in my own career where people say you can't make money in this career, I've done pretty well pretty early on at a very young age, and then just kept on capitalizing on it. So I think that's a little bit of a fallacy that, if you work at the front desk, you're going to make $22 an hour, $25 an hour. But when you're assistant manager, you're going to make $18 an hour. No, just kidding. You're going to make a little bit more than when you're general manager. So, I'm trying to get people excited about this industry with everything I'm working on. And you have to wait.
I don't disagree. But at the beginning of our discussion here, we talked about just the high cost of living today.
Yeah.
Right. And in major urban markets and their surroundings, listen, when I started 40 some odd years ago, $100,000 a year was a lot of money. Right?
Yeah.
Don't get me wrong. It's still a lot of money, but
it's not a lot of money like it was back then. Yeah.
Correct.
You'll be able to feed yourself, hopefully pay rent, and go on maybe one vacation for 4 days if you live in New York, if you're lucky. Or depending where you live in New York, you may not be able to pay rent.
Certainly not hitting that diner that you went to this morning often, that's for sure.
We split the check, so it costs us $30 each.
Yeah.
But the only $30.
Did he pay cash?
Yeah, he did. He actually did.
That is something that I think about a fair amount. It's pennies, right? But pennies become nickels, dimes, and then dollars, right? I go into my local bagel store and buy a bagel for $1.50. I give them a credit card. There's a technology fee attached to it. Yeah. It's everywhere now. And I'm just wondering whether at some point there's going to be an opportunity for the lodging sector too. It's like, why should the lodging sector eat that? It's like, it's becoming an accepted notion.
And they shame you into tipping because it says right there on the keyboard, it says 5 cents, whatever it is, 5%, 10%, whatever. So I just always use my debit card. I almost never use my credit card unless it's for business travel. I use my debit card and I use cash. It's just a habit. Yeah, listen, when you have 3 kids and a family, everything, when you get that credit card bill at the end of the month, and it's 5 digits, you're like, what the hell did I do? So no,
there are young folks today who they're like, what's cash? I don't know.
My kids,
they're Venmo and.
I could scream till my head blows off. My kids can't come up with $2 in cash in their pocket. I go to a drive-in to get them. I pick my daughter up. She's a school teacher. Pick her up, and she uses a credit card for a cup of coffee. Where I stopped paying for her coffee, but I was like, just pay for $2. Why? What should I do that? I have it on my card. Yeah, it's listen. Where was I in Vegas? I couldn't pay with my credit. I couldn't pay with cash. The Resorts World is all credit card. There's no cash.
Wow.
I went to the gift shop and the lady looked at me like I was trying to rob the place. She goes, "What's that?" I go, "It's cash." She goes, "I don't know what that is."
I thought that all businesses were required to take cash. I mean, it's really strange that you can say you can only take credit cards. I think that's a little weird, and I'm for the cash society. I want to keep it that way.
Well, I will tell you, in running a hotel, when I got no cash, I got less problems.
Yeah, of course.
Who's going to the bank? Who's going to count the banks? Who's going to do this? Who's going to inventory the cash? It's a nightmare. So especially in casino, in most environments, if you can go cashless, it just prevents having to have more labor.
Right. This is a little on the side, but psychologically, it's very different because I send invoices electronically. I get paid with electronic funds transfers. I then pay my bills electronically. It's like money isn't money anymore. It's just this weird number on a screen.
I will tell you something, and you both of you may know this, Glenn. Yeah. So I was doing somebody a favor, and I was doing a speaking gig for a brand, and it was very close, and it was easy, and I just gave them a relatively good price for what I normally charge to speak. And all of a sudden, I get an envelope. Like my assistant handles everything, so I don't know if we were paid or not paid. But typically, we're paid before I get on the plane. But I didn't ask. I didn't know. And all of a sudden at the end, I get an envelope. Like, Glenn, I told you the story, right? I get an envelope. And again, my mom ran numbers for the mob, so I know what an envelope of cash feels like. So I was just like, is this what I think it is? And he goes, put it in your pocket. So I go out to my room or the bathroom, or whatever, and I opened it up, and it was all cash. And I was like, I've never received a payment in the thousands of dollars in cash in an envelope. Now, I pay taxes on it. I claimed it, but it's like it was such a weird feeling to have that envelope in my pocket.
Just so the IRS knows, it happened 8 years ago, right? This sits 7 years
No.
ago.
I claimed it, but you never know. You never know. I claimed it, but my point being is, it was so foreign. That's how everybody got paid back in the day.
Yeah.
I remember, back in the day getting paid like that, but to have a brand give me an envelope full of cash was funny.
That
Anyway.
is funny. So, Dan, what do you see? You're talking about all the cash sitting on the sidelines and all of that. They've got to invest their money. Where are they going to be investing, do you think? What are the property categories and what are the locations that you think are going to yield the best opportunities in the coming year or so?
Great question. Listen, the flavor du jour for a while now has been, fairly new select service.
Yep.
Right. And there's nothing wrong with that. Great assets, but I don't think you'd necessarily find bargains in that part of the world. I think the real opportunity is in downtown major urban cores.
Oh, right? Let's make that a pull quote, because the last few years it's been the opposite. Why?
Correct. Well, why? Because listen, COVID was a terrible thing for downtown urban cores, right? And crime has become a significant issue for most downtowns. Look at San Francisco. It wasn't that long ago that San Francisco was a darling hotel market. Today, it's definitely perceived as a dog. And you know what? It is a dog. Mm-hmm. But in my mind, San Francisco's been around for a long time. New York's been around for a long time.
Right.
And we've been around long enough to know that these urban environments have ups and downs.
Hey,
right?
man, I remember going to the city in the 70s and 80s,
But
my office is at 41st Street and 7th Avenue.
Wow.
1 block south of 42nd Street. When I was growing up, you would not be caught in that neighborhood. Now,
no, it was just filled with stores where porn stores and places to get fake ID.
Forget about porn stores and fake ID. I remember standing on to get tickets in high school for something, and there was a live sex show in the theater, and I was like, "What the hell is a live sex show?" And my friend, I never forget, my friend said, who I'm still friends with today, he goes, "I don't think that needs any interpretation."
So let me just finish up here. I think the downtown urban cores are really where there are tremendous opportunities. And let's face it doesn't matter where you invest, right? The bottom line is it boils down to what is your basis in a deal? What's your economic basis in a deal? And so, I point to the Sheraton Times Square as kind of a poster child in my mind of a really interesting opportunity. Right, it's a big asset. MCR purchased it from Host. I think it was $373 million, if I can recall correctly.
Which is a bargain.
Well, hang on a second. On a gross basis, that's a lot of money. $373 million, and then you still have to figure out, okay, what do we do with this thing? Right. But on a per pound basis, Anthony, you're 100% right. $200,000 a key. I mean, you could not replicate that building for multiples of that amount.
In Times Square.
It's just north of Times Square. Yes,
well,
even though it's called the Sheraton.
Close
Times
enough.
Square.
It's Times Square.
But in my mind, that's a really interesting play, because at $200,000 a room, there can't be a whole lot of downside. Like, it's really not going to be worth a whole lot less than that, right? And there's a real opportunity to create value to reposition that asset.
That hotel, it definitely needs a serious reinvention, because again, it's one of those assets that are just older and they don't necessarily at first blush meet the needs of today's consumer. Anthony?
And to reopen it and to get it going, I mean, there's negotiations with the union that could cost another $300 million that people don't realize and don't think about. There was one hotel, we name nameless, that cut out a lot of their food and beverage and did a lot of job sharing. And from a perspective of loving the hotel, I wasn't in love with it, the idea. As a business person, when somebody asked me what they did and they were all upset, I was like, no, it's genius. I was like, it's genius what they did, and I can tell you off air exactly where it was and what they did. You lose a little bit, but at the end of the day, you lose a little bit with the cachet of the hotel, and you also lose top line revenue. They lost about 30% top line revenue, but they made 40% more money. So it's the way they situated their outlets, and somebody takes over the Sheraton and gets really, really forensic accounting in there and really understands how to do it. They can make a fortune in that hotel.
What about the Hilton Times Square? Remember, pre-COVID, right? Sunstone had a challenge with that asset, and then they finally just sort of gave it up, right?
Yep.
And it was announced that that hotel was permanently closed.
Right.
I remember reacting right then. It's like, okay, it's closed. It's not permanently closed because it's what are you going to do?
It's in Times Square. Right? It's on 42nd Street.
Correct. And sure enough, New Bond Holdings bought it, right? At a quite a reduced basis, which reflects today's market, right? And they've reopened the hotel. And
but do they still have 5 owners and 5 different floors, like the restaurant, the bottom? Like there was so many different owners in that building was one of the problems, right?
Yes.
And I think the deal of deals, and maybe I'm 100% wrong, was the Mandarin Oriental.
That was over $1 million a key, I believe. This is on Columbus Circle in New York.
Yes, correct.
Yeah, but what did it go for? It went for like $200 million or something.
Yeah. So to my point, right, the downtown urban cores at the right bases is candidly where I think the opportunities are.
Yep.
Right.
Yeah.
And Chicago is another really badly beat up market. Magna Hospitality has been investing money there at, numbers that are just, you kind of scratch your head a little bit on a per pound basis, what they're paying for some of these assets. Probably not a whole lot of downside, and there's only upside opportunity.
Yeah, and listen, I don't know the San Francisco market, and crime is bad if it happens to you. If it doesn't, it's not that bad, right? So I'll never say crime's not that bad anywhere. However, New York has so much resilience in it. If New York doesn't come back, and it's coming back, and it's come back, the country doesn't come back. And I don't think that's an overstatement. I think that's a truism. I think if New York City never comes back, our country never comes back.
The notion of urbanization is not going away. It's been evolving for a long time, and it's going to continue to evolve, right? Look at rents in New York for residential. Look at condo prices in New York. They are sky high because people want to live in downtown urban cores, right? They may not want to go into the office, right? They may want to work remotely from their high-rise condo, right? But
listen, how many movies and Broadway musicals have been written about the kids leaving the small town to go to the big city? That's part of America, is going and trying to get you a break in a big city.
If that didn't happen, there wouldn't be any waitresses or bartenders or Starbucks employees, because every one of them is somebody trying to make it, and a lot of them make it. Yeah, but they depend on those kind of jobs, the service jobs. I'm a glass half full person. I have tremendous optimism about our profession and our cities, but we're going through it right now, and I think the less as we get a little further away from a lot of divisiveness, and I think hopefully after this election cycle and we get some normal things going on, I won't say normal people, but I'll say normal people in all the leadership positions, whether it be Democrat or Republican. I think like everything else, it comes and it goes. So I think the divisiveness, it's the worst I've ever seen by a long shot, but I just can't imagine it's going to stay that way.
Hopefully not. And, in that vein, when you look at the divisiveness that's going on in the world, right, we live on during some really dicey times, right? Wars are always over there, right? Yeah. But there are wars going on, and there's more that's being talked about, right? China, Taiwan, Israel, Iran, right? I know it's all on the other side of the world, but that's not.
If you look at every decade, every generation, we were talking about this not too long ago. If you were born in 1910 and you were lucky enough to live to 100 years, think about the depressions, the recessions, the wars that you lived through. The time you get 100, you want to close the coffin and say, "I'm out," because it's always something. I mean, even if you lived 80 years and like you just my kids lived through Sandy, which destroyed our neighborhood. lived through a pandemic. They lost, their proms, their graduations, all of that. They're living on this divisiveness, and they're also worried about what you just said, China and Russia, and it's so just them in that small little 20 years opportunity. They've lived under a lot of pressure.
You know what's interesting? If you think about it, right? Times really have not changed.
Nope.
If you go back to the early 1960s, right, when there was black and white TV, 9 channels that after 11 o'clock the TV went off, right? We had the Cuban Missile Crisis, and I vividly remember. I was really young, but I vividly remember sitting around with my family watching. There was back then news, not what we have today.
Right.
And the news was that we were on the verge of nuclear war with the Soviet Union, right? And it was pretty scary. Today the issue is that you have all this content and media that is and opinionated media that is nonstop in everybody's face.
Yeah, it's crazy.
And it makes it appear that it's more heightened threat today than it was back in the 60s.
And it's all based on clickbait. How many articles have you clicked on? You're like, oh, that's interesting. And you go into the article and you go, there's nothing here. There's no, or you see an article, so-and-so died and went bankrupt and left his family. Oh, and the article is from 2017 and they just reused it because they didn't have anything to put on the front page.
Right.
And it's like, what? Did I just read? So I look at dates now. It's like, that's just like 2 years old. So I think that's the clickbait is what's happening. But also I'm sorry, Glenn, I didn't mean to interrupt you. We have to think, like it's coming out now on some news channels that they didn't believe 90% of the stuff that they put out there. Really? Did I really need that to be leaked to tell me that all these things that happened didn't happen? Do I really need that? I don't think so.
Well, I will say one thing that the way that the world has presented us is highly skewed because today that we are alive is the safest day for all of humanity in aggregate. And I think that we lose context of that. It's much better to be a human being in 2023 than it was in 1923 by a considerable margin.
Listen, you and I both just the other day went and got our old man test and and it shows things and you take medicine or whatever.
Right.
50 years ago, I mean, we might be dead.
Yeah. Old man's test. I'm not going to ask what that is. Go ahead.
I went into a machine and they determined that I actually do have a heart. So I'm excited. By that.
Right.
Yeah.
Yeah, I went into the same machine in different office. Not the same machine. We didn't go at the same time.
It would have been cozy though.
Right. But it's listen, we're at the ages that medicine can save us, and medicine can help us, and we have to do better and eat better. And I lost 12 pounds and I didn't know I had 12 pounds to lose. So, it's just a matter of taking care of yourself. And like you said, the world is much from a medical standpoint. In 1907, Glenn, the age of a man was 47 years old.
Yeah, it's crazy.
Literally.
Yeah, totally. Yeah.
Literally. And what was minimum wage when I was 13? I looked up the other day, was $2.35.
Wow.
Yeah.
Wow,
now
that's crazy. Dan, why don't you bring us home? Give us a big overarching thesis for what you want us to walk away with today.
Dan's like, I don't want to work that hard.
I don't want to just say goodbye on this note, so I want to bring it back to what we were originally talking about.
Listen, I'm an optimistic person. I like Anthony. The glass is half full, right? We live in in spite of all the issues and challenges that the United States has, we live in the greatest country in the world. I think we live in some amazing times from a technological perspective. Sure, there are lots of challenges. Within the lodging space, I'm very, very bullish on the lodging sector. I think there are tremendous opportunities. I think the sector has finally embraced technology and figured it out. The sector is also very forward-thinking now and much more proactive as opposed to reactive. So yeah, I think and there are some really interesting opportunities out there from an investment perspective.
Right.
And I think we're going to see more and more of that develop as time goes on. And these are exciting times.
Cool. Awesome. Dan, thanks so much for being here. We really appreciate you.
Great to see you both. Thanks for the invite.
Take care. Have a great day.
Bye-bye.
So I think the message, Anthony, is that no matter what the market circumstances are, there's always opportunity to be found.
Yeah. Kim posted, maybe you want to pull it up. it's my favorite song of Billy Joel songs.
Yeah,
and
I'll put
I have my kids listen to it because I don't want to be blamed. We did not start the fire. Billy Joel said it, and it's true.
Yeah.
We didn't start the fire. If we would take that song and update it to 2023, you would be able to just same stuff, just change the names, right?
Yep.
Just same stuff, change the names. And and listen, when we're gone, there's going to be other stuff. Robots are going to be eating the world, and we're going to be fake, and you and I are going to do the podcast. Matter of fact, should we tell everybody we're doing this podcast and it's really AI? It's not really us.
We shouldn't. I'd like people to continue to believe that I'm not in bed napping right now. All
right, brother.
All right, let's get out of here, everybody. Listen, you like watching us, but why not listen to us? We got a couple of texts saying, hey, we listen to you all the time. So why not listen on Apple Podcasts, iHeartRadio, Stitcher, SoundCloud, wherever you get your downloads. We are there. And if you're listening to us now, tune in. Look at our happy faces sometime on LinkedIn, Facebook, YouTube, and all of our shows are housed at NoVacancyNews.com. And, of course, YouTube. He's at Anthony Hotels. I'm at Traveling Glenn. Remember, you've got one life, so blaze on and
be kind to yourself.
See you next week.
Are you being kind to yourself?